Live from Bloomberg's world headquarters in New York, I'm Scarlett Fu.
And I'm Tim Stenovec. Welcome to Bloomberg Crypto. We'll look at the people, transactions, and technology shaping the world of decentralized finance.
Bitcoin is at session highs as sentiment rebounds from volatility that has upended the crypto industry.
In just a moment, we're going to speak to David Bailey, CEO of KindlyMD. The investor in various digital asset treasury companies is known for shifting the Trump family's perspective on crypto.
And we'll be speaking to an early investor in Polymarket as scrutiny grows over the Wall Street advantage in prediction markets.
That's all ahead over the next half hour right here on Bloomberg Crypto. First, though, let's just take a look at where Bitcoin is. You heard Scarlett mention that we're actually seeing it at session highs, really bouncing back. Over the last 7 days, up about 3%, surging just this morning to above 94,000 per Bitcoin. So this is actually the highest that it's been, going all the way back to November 15th. Over the last week, though, it's been a little volatile. It fell to as low as $87,000 just in the last few days. ETFs, though, we should note, have seen a record outflow in recent weeks. That volatility of late, though, has died down. I also want to talk a little bit about something that happened on the public markets today. 21 Capital went public through its Cantor Fitzgerald SPAC. It holds around $3.9 billion in Bitcoin. Now, if you go back to April 23rd, that was when the announcement was made. You saw shares spike to $50 each. Now it's down just about to about $11. Scarlett, that's close to 80% since then. And
21 is not alone, right? A large swath of public companies like 21 bought and held crypto. They are known as digital asset treasuries, or DATs, and they have seen their share prices plummet. Here's a look at the median returns this year. DATs as a group trailing the performance of their underlying tokens like Ether and Bitcoin, even though they actually hold those assets, with some individual DATs falling by 99%. By contrast, you look at the median return for stocks in the S&P 500 or the NASDAQ 100, and it's positive, Tim.
It has not been pretty for DATs of late. Well, here to explain more is Bloomberg's Monique Malima. Monique, you have a great story out on the Bloomberg terminal, and you note that among the U.S. and Canadian listed companies that became DATs, the median stock price has fallen this year. That's according to data compiled by Bloomberg. Bitcoin, by comparison, down just around 6% since the beginning of the year. Why such a big disconnect? Is it all about the leverage?
Hi, yes. So a lot of it is leverage. So these companies, in order to buy the cryptocurrencies that they're holding, a lot of them issue debt to do this. So that means that the leverage that debt gave them, when Bitcoin is going up, they can outperform Bitcoin. And when Bitcoin is going down, they underperform Bitcoin. And that's across all of these different crypto assets that we're seeing. But there's also some other factors at play. There's been, like you mentioned, a huge explosion of digital asset treasury companies. We have over 150 public ones in North America alone. So the more of these companies that have popped up, the harder it's been to compete. And that's also why we've seen, with these shrinking crypto prices impacting these companies, that this has been weighing on the premium that these companies can command for their stock prices.
So do we get to a point where these digital asset treasury companies might need to sell some of their crypto holdings?
Yes, so that's something some have had to consider. There are some digital asset treasury companies that have already had to sell some of their holdings to pay their debt. And even Strategy, which is the original digital asset treasury company and the largest digital asset treasury, their CEO said on a podcast in November that if their premium that they could get to their Bitcoin holdings fell below 1, it's something that they would consider too. So for all of these companies, it's something they have to think about, even if those debt maturities are going to be, for some of them years away. If it gets to a point where they owe these funds and they need to pay them back, they might have to sell those holdings, or they might have to look at being sold themselves.
All right, Monique, really appreciate your joining us and setting everything up for us. Monique Malima of Bloomberg News in Toronto. And that allows us to segue to our first guest, David Bailey. He is CEO and chairman of KindlyMD. David is known for advising the Trump family on crypto ventures. He has been a leader in digital asset treasuries. David, I want to start with the question that Tim posed to Monique, which is why the big disconnect between the median price of DATs, down 43% according to Bloomberg calculations, and the underlying token that they actually hold.
Yeah, well, first off, thank you for having me on. And I think Monique kind of nailed it. There's a lot of treasury companies that have come to market in the same time period. We have seen a lot of volatility in the Bitcoin price. I think, Bitcoin is down 25% or so over the past 3 or 4 months. But we've just seen a glut of treasury companies. And I think the market broadly is trying to assess what strategies differentiate them and who are going to be the winners from this 150 plus North American treasury companies that have come to market.
So how do you make sure, David, that you're the winner? What is it about your strategy that makes you think you can stand out among these digital asset treasury firms?
Well, I think at the end of the day, what the strategy is about is building a Bitcoin or crypto balance sheet and then monetizing that balance sheet. And I think the part of the treasury company strategy that we haven't really seen play out yet is how are firms like KindlyMD going to monetize their Bitcoin? So, we've seen just a few in the past couple of days, major treasury companies get approved at the SEC, start trading. I think today, 21 started to trade. And so the question is really, what are they going to do with their Bitcoin to make money? At the end of the day, you can think of a Bitcoin treasury company akin to a Bitcoin bank. You build a balance sheet, you put the capital to work, and you use that to make, non-dilutive sources of income. So that's the phase that we are in the cycle. Those that are going to be successful with it are going to be in the position to consolidate their peers, and those that aren't are going to be consolidated.
So I guess the question for you is, any plans to merge KindlyMD with any other DAT?
Well, we're definitely assessing what our opportunities are out in the market. I think what's a little bit different about our business is that we actually operate companies right now. I've been building, BTC Inc., UTXO for over 14 years. It generates significant income. Income is optionality. And so I think we're going to see these companies, as they're not able to run, accretive financial tactics like running an ATM, for example, they're going to really focus on where do they generate income. If you can generate income, you're going to trade at a premium to NAV. NAV is really a proxy for determining, are you growing the amount of Bitcoin per share for your company or not? So if you're generating income, you're going to be able to consistently grow your Bitcoin per share. And if so, you're going to be able to do M&A transactions that are accretive to your shareholders. And, just kind of sensing how many conversations are going on, I think Monique mentioned 150 companies that have recently pursued this strategy in the U.S. If I had to guess, by middle of next year, there'll probably be 70 of them operating. We'll have already seen half the industry consolidate. So I think that's healthy. I think that's good.
Okay, so consolidation ahead. That's a theme that we'll look for in the coming weeks and months.
Absolutely.
David, as Scarlett mentioned, you're known for advising the Trump family on crypto ventures. We've spoken to Eric Trump of American Bitcoin about his crypto ventures. Do you feel like you compete with the Trump family now when it comes to crypto?
Well, I think each of these DATs are taking and pursuing a different strategy. I think with American Bitcoin, they're really pursuing a mining first strategy, which is unique amongst the DATs. We're actually an investor in ABTC, and we're bullish on their strategy and approach. So I don't think we're directly competing, but at the end of the day, all of these companies are fighting the capital markets for attention. They all need to differentiate their strategy and approach. And so, there's only so many different strategies one can pursue. So I don't see 150 distinct strategies out there.
Yeah.
And we'll see which strategies are most effective.
On the Trump advising, are you still in conversations with the Trump administration, with the Trump family? Like, what can you tell us about those conversations and the ones that you're having right now?
Oh, yeah. Well, I think the president has been incredible to our industry. He's really ushered in a new era. I'm actually calling in right now from Abu Dhabi. I apologize if there's any connection issues, but I can tell you that every single conversation that we have here, they all talk about America's policy being Bitcoin forward. It has a massive impact on Bitcoin adoption globally. And I think that the fruits and dividends of that effort we're just starting to see. The midterms are coming up. The Bitcoin industry, the Bitcoin movement is very large. It's very broad. It had a very meaningful impact in the elections. And I think when the midterms come around, there's an opportunity for our industry to work collaboratively with the administration, turn out the vote for the Bitcoin president, and also advocate and negotiate for a new set of regulatory achievements that would kind of take our entire industry to the next level.
Well, I think a lot of observers would say that it's been a real win for the crypto industry just in the first few months of this administration. We all saw the power of the crypto industry when it came to the 2024 election. David, with the decline in the price of Bitcoin that we've seen just in the last few months, something kept coming to my mind, which was, is there a way for the U.S. or for the president to stabilize this cryptocurrency? And I'm wondering if, in your view, there's an opportunity for President Trump to essentially bail out Bitcoin.
Yeah, well, first off, Bitcoin is a volatile asset, up and down, and it doesn't need anyone to step in to stabilize it. That's the beauty of the Bitcoin market. It's the beauty of how Bitcoin works. There's always a buyer. There's always a clearing price. But absolutely, I think the president has the opportunity to demonstrate his prowess in this industry. I think if he has a number of initiatives that the industry is watching very closely, including the strategic Bitcoin reserve. And I think if the president, mobilized and acted on some of his initiatives in this moment, it could win him major political points. So, the president's very shrewd. He's very smart. And I think there is an opportunity for him here.
What's your understanding of the likelihood that the U.S. is going to buy Bitcoin for that crypto reserve?
Well, I can't comment to what the strategy or likelihood of them buying Bitcoin over a certain time period, beyond my pay grade. But I can tell you that they are extremely serious about this, that there is a significant team at the Treasury Department that is working on this full time. And, the United States already owns a significant amount of Bitcoin and digital assets. So it's just good governance. It's good business in order to take the assets America holds and make sure that they're custodied properly. And they are pursuing strategies of how to grow it. I'm bullish on America buying Bitcoin at some point, but it's up to the president. It's up to his administration to determine exactly when that moment is.
We started with digital asset treasury companies, and I kind of want to end there because as we've seen the share prices of those DATs decline, a lot of the pain has been borne on the retail investors. Do you feel that it's the retail investors that have really borne the brunt of that trade unwinding?
It's not just retail. I think it's broad-based. When I look at who participates in the pipe transactions around each of these DATs, it's a lot of institutional names that I think your viewers would recognize. So it's broad-based pain, and I can tell you it's painful as an operator of one of these treasury companies whose stock is down. You hate it when it happens, but it comes with the territory of Bitcoin. I've been buying Bitcoin since $10 per Bitcoin. I've been through 70% drawdowns in the price of Bitcoin, and so as Michael Saylor would say, volatility is vitality. So there is definitely a lot of volatility, but that was what creates the opportunities.
David Bailey, thanks so much for joining us on Bloomberg Crypto. Really do appreciate your time this evening. That's the CEO of KindlyMD. Well, coming up, event contract platforms are pushing to delay wagers seen by professional traders in order to create fairness among users. And to access all of the latest data and news on crypto, just check out CRYP Go on the terminal. This is Bloomberg.
Circle is designed in line with those new rigorous federal laws. That creates a model where these dollar digital currencies really are a safer form of money than even commercial bank money, and a very, very safe, full reserve kind of dollar money. And we think that with these regulations, it strengthens that further, and that will lead to even further kind of promulgation and adoption of technologies like USDC.
That was Jeremy Alaris, the CEO of Circle, speaking earlier today to Bloomberg at Abu Dhabi Finance Week. Now, one thing certainly getting adoption is prediction markets. Crypto.com has introduced a 3-second delay for customers who are placing bets on sports games in an effort to create fairness. And this is because market makers on the platform typically get a head start over retail investors. Kalshi has submitted a similar proposal to implement delays. Bloomberg's Lydia Bayou joins us. She reported on this story. And Lydia, I'm not sure I understand why this move is coming. Isn't this basically telling retail investors you're not going to get a fair shake?
So what we're seeing here actually is prediction markets starting to mirror more the actions of traditional gaming platforms. What this change is meant to do is address the phenomenon of court citing. If you are courtside at a game or an event, you have information before anyone else does, including market makers. So it seems like this is being implemented in order to sort of equalize that playing field again for market makers who are on the Crypto.com platform. Kalshi sent us a comment after publication yesterday saying that although they have filed to make this their own form of delay, that they haven't decided whether or not they'll go through with it. It does seem to be live on Crypto.com, though.
So does it actually even the playing field, if we're going to stick with sports metaphors?
I think that, it's the question is, are we just talking about courtsiders and market makers, or are we talking about retail? I think that there's going to be a difference of opinion there. Crypto.com did put in this regulatory filing back in July, and they did put this, they disclosed it on their website, but it was sort of buried down in terms of service and FAQs, so I don't know that a lot of people knew necessarily that it was happening. I'm curious to see how this plays out with people reacting to it and in trading going forward.
Is the retail, like if we think about the platforms, like who are these platforms actually for? Are they for the professionals or are they for the retailers now?
So you need market makers typically on these prediction market platforms to make sure that there's a lot of liquidity, and Crypto.com spokesperson did say that they were implementing this for the purpose of improving liquidity there. But there are more and more questions coming up now about the role of market makers, both internal and external, on prediction market platforms. And this question of fairness, it's something that courts are starting to look at. And it's going to be maybe central to how both the Commodity Futures Trading Commission, which regulates these exchanges, as well as state gambling regulators, think about this as this is all playing out. It's one of the big questions ahead for this administration.
All right, so a developing story, and clearly one that we'll continue to check in with you on. Bloomberg's Lydia Bayud in Washington covering the SEC and CFTC.
Sometimes I just go to the Polymarket website to see the trending bets. Here's one. Elon Musk, number of tweets December 2nd to December 9th, 2025.
That's an actual
wager.
contract?
$19 million in volume has been wagered on
Really?
this. Yeah.
On whether
400 to
Elon Musk is gonna
419 or
tweet?
420 to 439. So the number of tweets. There's a lot of room for like.
Wow,
I think
some people need to find something to do. That's my take.
I like it.
All right, coming up on Bloomberg Crypto, we talk to an early backer in prediction market platform Polymarket. Dragonfly's Rob Hadick joins us next. This is Bloomberg.
This is honestly an average drawdown magnitude for Bitcoin, which is a highly volatile asset, typically sees 10% plus drawdowns 3 to 5 times per year in bull markets. Nothing out of the ordinary for Bitcoin's history. I think it is basically on macro expectations changing over the last few months.
Well, that was Grayscale Zach Pandel speaking to us just last week about crypto sentiment. Well, the recent week's sentiment isn't stopping PNC from offering Bitcoin to wealthy clients. The Pittsburgh-based bank is allowing high net worth customers to trade Bitcoin directly through their investment accounts. Through a partnership with Coinbase, PNC hopes to make Bitcoin available to institutional investors, including nonprofits, endowments, and foundations. Bitcoin up close to 3% today.
And it's something that we've seen from a number of traditional financial institutions. Let's bring in Dragonfly General Partner Rob Hadick. His $4 billion fund has backed companies like Anchorage Digital and Polymarket. So there's a lot to discuss with him. But I want to pick up on where Tim left off with PNC making Bitcoin trading available for its high net worth customers. The CEO of the bank said that fintech broadly wants to pick off parts of the bank's relationship with its customers with product offerings that effectively make banking in the back office, and there's no reason why they should be able to do that. Do these kinds of moves to offer crypto services to traditional existing bank customers prevent customers from going to crypto-first firms?
No, I don't think so. You want to meet customers where they're at, right? And so you see distribution that already exists at places like PNC. You saw Fifth Third talk about this. You saw Klarna talk about this recently. And that's a way to permeate and to proliferate, what is crypto, stablecoins, tokenized assets. But as people get exposure to, the asset class through, PNC or through, any one of these kind of traditional financial market participants, they're going to get more excited about what are the other things they can do, and they'll probably find their way to more, crypto native types of platforms over time.
Well, one of the things that customers are finding their way to are these prediction platforms. So didn't want to call it gaming or gambling or wagering, but prediction, I think, is the term we're using. Polymarket, you're an investor in Polymarket. And I mean, you could pretty much bet on anything. We were just talking about Elon Musk, number of tweets from December 2nd to December 9th, 2025. $19 million in volume has been wagered on this. What is this? This seems kind of crazy to me. in this world that we live in? What is this moment right now where you can just really bet on anything?
Yeah, I mean, prediction markets are really just, they're options contracts, right? And they allow for, and poly markets specifically with their kind of tokenized markets, they allow for you to stand up any type of wager, right? Or any type of bet. And what we've seen is a lot of interest around getting direct exposure to certain types of events. So, traditional market participants often, they'll gamble on or they'll put money on, what is going to happen in the bond market relative to how I think, PCI will come in or how I think, some sort of macroeconomic factor will come in. Well, now you can just actually go and wager on that directly. I was actually talking to an insurance company earlier, about a couple of weeks ago, that offers a certain type of, homeowners insurance in Florida, and they wanted to actually hedge out some of their risk with certain types of weather-related activities. And they could do that directly on an event contract on a poly market, right? And so you don't have to have these, call it second-order effects.
That's a professional, though.
Yeah, it is a professional, for sure. But you're seeing it in the retail side as well, right? Where people want to, it's really become really social, right? So I think on the social side, in your group chats, when Sam Altman was actually fired from OpenAI, my group chats were talking about it the entire weekend. And then, he was fired on a Friday, he came back on a Monday. And people were saying, okay, well, what does the poly market say? What is the collective wisdom, the collective information saying about what is likely to happen? And we've seen that be, permeate all types of different asset classes.
So to Tim's example, though, how do you prevent fraud or insider trading from taking place? Elon Musk's number of tweets over a 7-week period, he could just let someone know or someone could find out and they could place a bet.
Well, there's imperfect information, right? And that's true in all financial markets, right? But that doesn't mean that there is fraud. What there does mean is that you have to have the right controls in place to make sure that you don't have, call it insider trading. But those rules already exist for other types of assets, right? When you have that type of imperfect information. So in this case, what you want to see is the platform itself have the right rules in place, make sure that they have the right sort of KYC AML in place, make sure that they're doing financial surveillance the way you see in traditional markets, and then they're allowing for the tokenized upstart of any market, right, and having direct exposure to any type of outcome.
All right, Dragonfly general partner Rob Hadick joining us here on set at Bloomberg Crypto. That is going to do it for the program this afternoon. Join us again, though, next week for another edition of Bloomberg Crypto. This is Bloomberg.